Welcome, ladies and gentlemen, to Commodity TV and a new edition of our online interview series. We want to get an update from Discovery Silver. And Forbes Gemmell, the Vice President Corporate Development, is here with us. Good morning to Canada. How are you, Forbes?
Good morning, Johan. I'm very well, thank you.
Yeah, great to see you. Thanks for taking the time. There is a lot going on these days, and we have super shaky markets. Despite of that, it looks like that we might run out of silver this year already. It's getting really, really interesting. And your project Cordero would be one in the not too far away future, which could really help that the deficit in the markets might get a little bit smaller. So you guys just announced a very positive feasibility study, meaning feasibility results. And yeah, you want to establish Cordero as one of the world's leading, or it is the one of the world's leading development stage silver projects. So please comment a bit on that.
Sure, yeah, we're very happy with the results of the feasibility study. We feel we've outlined certainly one of the largest silver deposits globally, but what's also nice is we've demonstrated excellent profitability
Mhm.
as well as excellent capital efficiency. And so, as far as pure numbers go, we're talking a 19-year mine life. We've shown annual silver production of around 33 million ounces silver equivalent. So that would make Cordero a top three primary silver mine. And the all-in sustaining costs over the life of mine around $13.50 an ounce, but in the first 8 years actually below $12.50 an ounce. So that puts the project in the lowest bottom or the bottom half of the cost curve. So I think when you look at those metrics, certainly world's leading development stage silver asset, a tier one silver asset. I mean, it certainly ticks all the boxes, I think, to
Mhm.
substantiate
Yeah,
those claims.
yeah, absolutely. I saw also that you have like $606 million as a starting capex. How actual is that now? Meaning, are they, yeah, maybe again some surprises upwards, or do you feel very comfortable in today's inflation environment?
It's a good question. Obviously, very topical these days with some of the capex blowups we've seen in the
Mhm.
industry. Uh, the pricing is obviously done as of the end of last year. So we
Mhm.
went out, got quotes from all the vendors for all the key pieces of equipment. So that factors in the latest pricing. And what also we've done is we haven't just tried to sort of cut things right to the bone. So, for example, the big pieces in the mill, the SAG mills and the ball mills, we didn't just choose the cheapest SAG mill ball mill. We
Mhm.
chose the brand that we would want to use as an operator because we're going to be running this mine for 20 or 30 years. So there is that element too. There's also some added redundancy we've brought in terms of the scope design. So there were things in the PFS which were more on the sustaining or
Mhm.
expansion capex, but we brought that forward
Mhm.
up front to improve our redundancy through the ramp up of the operation. So we feel it's a very defendable number and certainly a number that we now have to stand behind and execute on. And
Mhm.
it's certainly been subject to a lot of third party review as well. So we
Mhm.
feel it's a good solid number for us to
Okay.
now sort of go out and try and execute on.
Super. As I read, also you have a very, very substantial socio-economic contribution on the one hand, which I always rate extremely positive because I think everybody should benefit, not only as shareholders, and I am a shareholder of your company, not only the shareholders or the management. I think everybody really good jobs, fairly paid or good paid jobs. Yeah. Also take care of the environment. All those boxes are checked with your project. So we heard or we read in the news that there might be some, yeah, mining law changes to make it harder to permit open pit mines, or even to say no to that. Can you, I know it's a tricky question for you and hard to say something, but can you maybe comment a little bit onto it? Because we got a lot of phone calls due to our last interviews with you guys from our viewers.
Sure. So look, and for background, the president of Mexico, AMLO, he introduced 20 reforms. I think it
Mhm.
was announced sort of a couple of weeks ago. And one of those reforms is talking about putting a ban on open pit mines. To get those reforms through, it does require a change in the constitution, and you need a two-thirds majority. I think it's in the Senate to be able to do that. So his ruling party does not have that, so it's more than likely the reforms will get rejected. And look, we are coming into an election year. The election is in June. The official handover of the presidency happens in September. And in Mexico, you can only serve one term. So look, there is going to be a new president in power in September.
Mhm.
And so look, for us, I mean, we're adhering to the regulatory framework that's in front of us right now until it changes. And look, anecdotally, it's interesting because when you look at open pit mining, more than 250 operating open pit mines in Mexico, 60% of the metal output from
Mhm.
Mexico comes from open pits. And then obviously, if you look at the construction industry, the number of quarries you need to then build material. I mean, putting a ban around open pits would obviously have catastrophic impact across the economy as a whole. So, and certainly for us, I mean, we've got the regulatory framework on one side, but when we look at our project, we have been very focused on the socio-economic benefits. And we're here wanting to come in, invest $600 million to get one of Mexico's biggest mines built. It's going to
Mhm.
create over 2,500 jobs during construction. We're going to pay over almost $1.5 billion of taxes over the life of the mine. And we are fortunate we're in a part of Mexico where there's a very long mining history. We do have that local support. We're just down the road from the town of Parral. That's effectively our nearest community.
Mhm.
Um, and for your readers who are familiar with Gogol, they're actually processing tailings that reside within the town. And there's multiple mining universities in the town. There's a lot of mining graduates coming out that we would love to tap into and work with as we sort of move through this next phase of the project. So,
Mhm.
so look, there's a lot of benefits that come with it. Not to mention, obviously, we're producing metals that are going to be critical for solar panels, electric vehicles, wind turbines, etc.
Mhm. Mhm.
Everything that we'll be needing in the future too.
Yeah, e-mobility itself.
Yeah, exactly.
Absolutely. Let's talk a bit about the project itself, also about production. I think with $22 silver, $1,600 gold, $1 for lead, $1.20 for zinc. I think this is yeah, very conservatively assumptions. That is fine for me. What I found really interesting is that you plan, first of all, a processing plant of 26,000 tons per day, and then you want to go up to 51,000 tons per day in year three at a capital cost of almost, let's call it $300 million. So you can really finance then that out of the production and pay maybe a debt service and do paybacks.
Yeah, look, if we were a big company, you would build the big plant, the 50,000 ton per day plant from day one.
Mhm.
But what we've done with our study is look at it through our lens as a smaller mining company, so we get maximum capital efficiency. And so you do the initial build, that's going to cost around 600 million, get the project de-risked and ramped up.
Mhm.
And the feasibility assumes the expansion is built in year three and is operational in year four. And so
Mhm.
that does come in the payback period.
Mhm.
Uh, Look, the reality is, I think we get the original project financing to get the mine built. We then look at refinancing options for phase two, but keeping in mind that
Mhm.
most of the phase two build should be funded or will be funded through the internal cash flow from the mine. And
Mhm.
certainly when you talk around sensitivity to commodity prices, 33 million ounces silver equivalent of production, when you take silver prices up 10%, that's a lot of extra cash flow that's going to be coming in. And we're talking about where silver prices will be in 4 or 5 years' time. So
Mhm.
we are planning ahead in terms of staging it, but I think the objective here is certainly to fund that expansion through internal cash flow.
Mhm. No, I like that because it's without dilution. That's good for
Exactly.
shareholders. What is also really interesting is you said it already, only 10% upwards in the silver price, then the thing looks completely different. I mean, it's already very positive, but then it's like really skyrocketing. And you would love to hear that if we are right with the physical silver. I have done chart analysis on silver, and the high targets are 66 and 114. then your project looks really different.
We haven't
But
done those
anyhow,
numbers.
yeah, exactly. But let's stop dreaming. Hopefully it works. What I also saw is that you will have a peak production in year 8 of 64 million ounces silver equivalent. What is the reason for that? How can you say already in year 8 you will do that instead of the average of 33 million, or let's say the average of 40 million ounces from year 5 to 12?
Yeah, sure. So, look, we're dealing with a very large deposit. Um, and certainly in the silver space, it is the world's largest undeveloped silver deposit. And we do see some grade variability throughout the deposit. So
Hmm.
when we put together our mine plan and then look at the grade variability, what's getting fed to the mill each year, we do see some ups and downs over the course of the life of the mine. And what's nice is we see some really good grades early on. So that helps drive that early cash flow. But there is a period there, you're right, around year 7 or 8 or 9, where we come into a beautiful high grade zone. And then that ultimately drives a huge volume of production in that 1 year. So that's in mining, you're beholden to the nature of the ore body in terms of grade or its distribution. So that just explains that variability you see in production,
Hmm.
which is very
Okay,
common.
super. We saw that you have 302 million ounces in reserves, silver equivalent. But if I look at the resource statement, you have also measured an indicated resource of 1.2 billion ounces silver equivalent, and also an inferred resource of 155 million ounces silver equivalent. What do you need to do to convert parts of that also into reserves? Meaning, how likely do you see that you are not only producing 19 years, but maybe 40 or 50 years?
It's a good question. And look, when you talk about the reserve base, sure, there's upside with the resource, but
Mhm.
at 302 million ounces of reserves, we actually have more reserves than companies like Core and Hecla, which have a number of
Mhm.
operating mines. And then even Pan American, I mean, if you take out Escobal from their reserve base, we actually have more silver reserves than Pan American Silver. But what's
Mhm.
nice is the big resource that actually sits outside the feasibility study pit.
Mhm.
And that resource pit is economic at a $24 per ounce silver price.
Mhm.
So if you look in the future, we've mined the reserves pit. There's about 320 million tons of ore that's fed to the mill.
Mhm.
But we now, assuming at the time silver's high, which I think we expect it will be, you have about
Mhm.
240 million tons of resource that sits within a bigger pit that
Mhm.
could contribute to another 10 or 15 years of mine life at that point in time. So
Mhm.
it's very rare you see that in the silver space. Most silver deposits are vein deposits, and they don't really grow at a higher silver price. You get more margin.
Mhm.
That's where Cordero is pretty unique because you get the margin expansion, but then you also
Mhm.
get the deposit expansion as well.
Mhm. Okay, super. So 2024, what is upcoming, let's say, most important things to do for permitting to really move that thing forward into production?
Sure. So we've got the feasibility study out now. So our
Mhm.
focus is using that as a platform for all our project financing discussions.
Mhm.
And look, right now, all options are on the table, sort of debt, equity, joint venturing,
Mhm.
even potential sort of sale, if that
Take
makes
off
sense.
stream. Yeah.
There's offtake as well.
Mhm.
Streaming's on the table. I think we have to run the numbers on that,
Mhm.
keeping in mind if silver goes to $60 or $100, that does get expensive over time. So you do obviously need to understand that sensitivity.
Yeah.
But advancing everything on the project financing front, concurrent with that, we're still moving our way through the permitting process. So
Mhm.
we submitted our EIA in August of last year. The technical review for that is still ongoing.
Mhm.
But we want to be in a position where when we get our permit, and is that sort of towards the end of next year, towards the end of this year, early next year, we want to be in a position at that point in time where we've got our project financing package or whatever that sort of corporate strategic
Mhm.
option is that makes
Mhm.
sense. We're ready to move things forward. So we're getting all the ducks in a line this year in
Mhm.
preparation for that. We do
Okay,
also have
super.
the option of moving some of the engineering forward and doing some other key de-risking items along the way too.
Mhm. Okay. And are you financed until, let's say, the complete project finance will kick in and that you can really start building and you have all the money?
Yeah, so we finished end of last year with 60 million in cash.
Mhm.
So that should get us through to that construction decision,
Mhm.
which, as I said, we're sort of hoping that that'll be towards the end of this year or early next year. So we are well funded to get there.
Mhm. Okay, super. So I would say things look quite well,
No, they
right?
do. And as you say, it's been an interesting backdrop in the markets and certainly in the
Mhm.
gold and silver space. But I feel like we are getting close to that end of the cycle with the rate rises. And there was obviously some weaker economic data out there yesterday,
Mhm.
which that burden's starting to build up. And I think that that's been the big headwind the last 2 years on gold and silver prices for that
Mhm.
rate rise environment. I think we're coming to the end of that. So it's going to
Yeah.
be a pretty exciting time to be sort of sitting on the world's largest silver deposit.
Yeah, exactly. Especially in the light that we are now entering the sixth consecutive year of a huge market deficit.
Yeah,
I read some prognosis for this year already. Again, 140 to 180 million ounces of silver shortfall. And I just was on the website of the Silver Institute and checked the last 5 years. That is 680 million ounces deficit now. I mean,
yeah.
real physical deficit. And then I checked against that, I checked the LBMA vaults. They were shrunk by approximately 380 million ounces.
Well,
So the silver is leaving the vault.
yeah.
That's interesting. How long can this persist?
And there's not many projects coming through. I mean,
Exactly. Yep.
I think all the operating mines, they're obviously depleting reserves. And when you look at the
Mhm.
growth pipeline across the industry, there's not much out there. So I think we're very well positioned here as we look ahead to that future
Yeah.
demand.
Yeah, definitely. And I mean, with the energy transition, e-mobility, solar, etc., the world needs silver. It's very simple. Without that, there is
Yeah,
no AI, there is nothing. We can go back to the combustion engine, there is no hydrogen. Very simple. It is what it is. Yeah.
exactly.
And so, from that side, we need definitely your mine. And so I would say, get it done.
Okay. We'll get on it.
Super. Forbes, thank you very much for the update. Great insight. I think we see us next week at PDAC probably.
We'll
You
be
will be
there.
there. Exactly. Me too. Fantastic. And then let's have a talk there and meet us and look forward to that. Thank you very much. Best regards to Tony also and wish you all the best.
Perfect. Thanks, Johan. Appreciate your
Thank
time.
you.
Cheers.
Thank you. Yeah, ladies and gentlemen, that was Forbes Gemmell, the Vice President of Corporate Development of Discovery Silver. Yeah, you heard it, the world's largest silver development project. And hopefully within the next 3-4 years, this will go really into production. The average production for 19 years is approximately 33 million ounces silver equivalent. That is really outstanding. That's exactly what the world needs, to be honest, because we have such a large shortfall and the deficit will not go away. And I already said silver is the next uranium, to be honest. And we saw what happened with the uranium price. So I'm quite positive on the silver price. And to be honest, I see Discovery Silver not only as a great company, I see it also as a really conservative option on the silver price. But you have no bank against you. That's not too bad. So from that side, check out the company. Really fantastic. I think there will be a lot going on this year and next year. And my feeling is the share price will also move. From our side, 150 is the next target, and then we see approximately 275 in the making. So thanks for that. Thanks for watching us. Bye bye from Switzerland.